Thank you, Akosh, for telling me that. I appreciate that. I was just quickly saying that yesterday's price action, I'm just doing a review here. Yesterday's price action, the main areas that we were looking at was the 45.30s, the 45.20s as the overall zone. It should be working now. Sorry, I had the mic was switched off there. If it's not, if you guys can confirm before I continue, let me know. I'm gonna give it a few seconds here, my bad. It should be good now. Okay, cool. Thank you. Appreciate that. All right, cool. Let me just restart really quickly. So just to do a review before we dive onto the price action for the day, the main thing we were looking at yesterday was continued sells below the 45.30s, below the 45.20s, which was this overall zone right here, because anything above those 45.30s, actually we can do this on the whiteboard, make it a lot easier for ourselves. I'll just zoom in a little bit more so you guys can see that. Just to quickly show you guys the main ideas, right? So the 45.30s was our area of interest. We know that overall this zone, which we had marked off, was that key area where price needed to stay below for us to continue pushing towards the downside, and we can have that technical confirmation, right? Because we were following the technical bias of price being more on this bearish run, other than the fact that price from this area kept rejecting and kept bouncing and staying above. So anything above those 45.30s, we were cautious in case price was going to continue rejecting that. Then at that point, there's no need to force those sells as price was at these low points, right? Why force sells when price is rejecting this area? But yesterday, that wasn't the case. We also marked off these highs. If you guys remember, I'm always gonna point out the things that we talk about. We pointed out these highs, and we understood that because at the time that we were looking at price action, which was just this area right here, we knew that price was still kind of bouncing and it was still stuck on top of this price range, the 45.30s. And we understood that, well, if we're gonna do deeper pullbacks, for us to see maybe some sort of rejection plays, some sort of bounce plays, the deeper pullbacks were ideally not going to get above these highs right here. And I point out these highs in the middle of this range because it's basically where price started to create this bearish structure after we rejected this area. We rejected this area, and notice how price started to create lows, a high, which is that high point right here, and then we were back at these lows right here. So from this perspective, looking at price action like that, we understood that we were more on the bearish side. Again, we just needed the technical confirmations to get below this area and also not break above this zone, because it could get a little bit tricky. Price at that point could do deeper pullbacks before continuing towards the downside. But as you can see, price did not get above these highs. And what I explained as well is that if we can't get above those highs, then the probabilities of us breaking those lows, it becomes higher. The probabilities rise because of the fact that you have buyers attempting to push price up as it rejects those lows, but they're failing to do so, right? So again, that gives us more of a reasoning to look at the markets there from a technical perspective and understand that sellers are more in control because buyers are struggling to push price towards the upside, even from those lows. And so as you can see, the follow through was super clean. We had a very clean breakout. I believe we saw that during the stream, and price, I honestly melted. You know, we had a really big run towards the downside, and then the overall zone, notice how price ended up retesting that area of interest, failing to trade above those areas, not showing us any signs of buyers stepping back in above these zones, which is what we saw, for example, here. We see those reactions here, right? We even saw them here momentarily. So below those 45.20s and now those 45.10s, really, that's where we can continue to look out for those sells. So you can see overall how price action from those highs, it basically created that structure that we were looking for, right? I just pointed it out visually there for you. We got lows, lower highs, lows, lower highs, lows, lower highs, right? It made its way towards the downside. That's what we can see based off that price action. So clearly, technicals are still more on the bearish side as we continue to push below those areas of interest. And those fundamentals still have not shifted. Let me just point this out here. So now what we're going to pay attention to is the fact that, okay, well, we've already made our move down. We've already made a move lower. We've seen price now exhaust at these lows right here, which is all of these candle wicks and the candle bodies closing above, what is that, like the 44.50s, 44.60s, more or less around this area right here is where price stopped and has now created this support for us, which we'll mark off right here. I'll move this lower. Let me just I'll clear the screen, and I'm gonna mark this as our new area of support that we have here. And then this zone that we had yesterday, I'm just gonna adjust it. I'm gonna adjust it to this, because at this point, the 45.10s becomes our new area of interest, because it's where we have previous body reactions at the 45.10s. We have candle closures below that. We have retest of the 45.10s. You have continuations below the 45.10s, more retest of the 45.10s. So again, 45.10s, as you can see, clearly our area of interest, where we need to make sure that we can stay below and look out for some sort of rejection plays below that area, below the 45.10s. We don't want to start to trade, or we would want to be cautious if price starts to trade above those 45.10s, because at that point we would be entering an area where in the past you have, for example, these candles that try to push into the zone but overall stayed above those 45.10s, 45.20s, more or less around that area. 45.10s. 45.10s, this one also above the 45.10s. So again, you can see the clear bullish reaction above that area of interest. So meaning that today, as long as we can stay below that zone and continue to reject, in my opinion, we can still see further moves down to recover or correct some of this large upside momentum. Because right now, although we have more bearish price action, the current phase that we're at and what we're looking at is a rejection and a bounce off of this new support that was created. And we've pretty much had only bullish candles getting formed. There's no signs of sellers just yet, because of the fact that, again, you have this is like almost 8 hours worth of price action. The price action has just been bullish from those lows, right? So we need to make sure that as we approach these new areas of interest that we have, which is, again, 45.10s, that's what we're looking at right now. As we approach that zone, we want to look for exhaustion. We want to see wick rejections, right? We have wick rejections like right here. We have wick rejections right here, basically telling us that those intraday time frames, sure, we can do a pullback into here, but as long as we're leaving rejections at that area, that's still signaling to us that sellers are still in control, and overall the market is still flowing towards the downside, following this structure that we're on right here. Again, the only thing that's going against that overall bearish bias is this current little bullish leg that we're seeing right now from the bounce off of that support right here. So we're really just going to be patient. Like I said earlier, we don't have any economic calendar, or excuse me, any economic data to look out for today. So we'll mainly be paying attention to price action. I'm gonna go back to the other board here just to look at the dollar and have an understanding of the dollar as well. So let's look at the dollar here as well. Yeah, yesterday we had a little bit more strength on the dollar. We continue to, let me see, where's price action from yesterday? Right here. That's what I thought. Okay, so yesterday, excuse me, we were trading just above the 99.250s. We understood that was our area of interest on the dollar, and we wanted to maintain above that area of interest to further signal more strength on the dollar from a technical perspective, right? Those are the zones that we had marked off, and you can see above that area, price did have a nice push towards the upside before basically retesting these highs right here and sort of pausing at that area. You can see the pullback that price did just to those precise points right there, the 99.250s. Sorry, I got confused with that. But yeah, 99.250s, still trading above that. It looks like price action here on the dollar, still very much bullish, with highs being made, minor lows, highs. The lows still continue to the lows still continue to respect the overall structure that's being created here on the dollar. So overall, we're still seeing strength on the dollar. Right now, we're doing a pullback from these highs right here, which we can pretty much just mark off like that. It's pretty much the 99.4, 99.445s. is the main area that we're looking for. We'll be looking to see if dollar can continue to climb towards the upside, so we can have that clean correlation in our favor, and we can be on the lookout for further sells on gold. One thing that I want to talk about is, which I saw someone ask this question yesterday, and I honestly didn't get to it, which I apologize. But what I wanted to talk about was those adaptions, right? So in case you guys aren't familiar with what adaptions might be, say we have today, for example, our analysis more on the bearish side. That means that we're more so looking for sells, right? I'm not specifically telling you what to look for, but I'm telling you the bias based off the fundamentals and the current technicals that we're seeing here on gold is still, in my opinion, more on the bearish side, right? Again, minus the fact that we're climbing towards the upside right now. And so what we want to prepare ourselves for is, in case our analysis is wrong, there's no need to sit here and, be sad about it. You can prepare yourself for other scenarios, which in this case, in my opinion, would be if, for example, we get price action to show no exhaustion at those 45.10s, and we start to see engulfing candles trading above this area right here, right? So we start to get candle closures above this zone. What I want to see, for example, for me, in terms of like how I would adapt, is I would want to see price create new highs above those 45.10s to really signal that buyers are strong enough to push above the zone. But more importantly, I want them to hold above that zone. I want them to establish themselves and hold that price point, so that way we're not back inside this range, right? Meaning that we would want to see candles closing above those 45.10s, and if we can get candle closures above plus retest of that area of interest and rejections with no breaks to the downside, that's where I would be looking to adapt, possibly to go and look for buys in the market and adapt to that price action that we're seeing right now. That's if we get candle closures above. But seeing just how strong price action has been, I would be completely wrong if I didn't think that price was going to at least reach these areas and give us some sort of reaction. I don't believe right now, again, I could be wrong. Maybe I'm unaware of a fundamental event, which I don't think so, because there's nothing that I read through in this morning's article. So far, it seems like everything still remains the same. Still focusing on the higher inflation figures, still focusing on the possibility of having a more hawkish Fed, still focusing on the idea that the dollar and yields have been stronger. So again, I don't really have like a strong reason to really sit here and say, well, you know what? From a fundamental perspective, today we should break that resistance. I don't think so. So that's why I'm still saying, like, you know what? I don't think that's going to happen. I'm going to be on the lookout for rejections off of these zones right here, those 45.10s. But again, we could be wrong. And if we are, we know exactly what to prepare for. And that's if we can trade above those 45.10s, right? But we still, at that point, we would need some sort of 1 hour candle close above, a 4 hour candle close above, at least a 30-minute candle close above, and then give us those rejections maybe on those lower time frames, right? So in that case, I think there's still plenty of time. There's no need to even be thinking about that right now. Even as price approaches that zone of interest, personally, I'm not going to be looking for breakouts above that zone, because I would think that price is probably going to get into that area, and because of the fact that we're still more on the bearish side, I would assume we're going to at least get some sort of pullbacks into the zone. That's what I would think. So I would rather wait for price to make a high and then give me a pullback, so it can be some sort of a break and retest type of scenario, and then I can look to take advantage of further buys after price does that retest. I don't want to just follow and chase this bullish price action and think, well, we're approaching an area of resistance, I'm going to buy as soon as we break out. Again, I don't see why there's going to be that much buyer strength on gold. So I would just much rather let the high be made, let the retest come, and if we can get the rejections off of the retest, off of those highs, that's where I would at that point adapt against my overall bearish bias. Only if we get those technical confirmations above. And also, for all we know, we can get some sort of fundamental event. Right now Trump can go can go and say something on Twitter, and we know that the markets will react to that. Any comments about the Iran war, any sort of signs of of the escalation where we might see dollar have a little bit of a pullback, then at that point we can talk more clearly about buys above the resistance. But right now, nothing's changed. Everything remains the same from a fundamental and a technical perspective there. Good morning, good morning. What's up, Marsha? Didn't see you in the lives from yesterday. Thank you, appreciate that. It is true and pure Colombian art right there. But all right, that's pretty clear. That's pretty clear. Again, we don't really have anything in terms of, I personally go through articles mostly every morning just to kind of understand what the markets are focused on. I like to read, an economist overview. Pretty much everything that we talk about. Higher inflation, higher yields. We've seen a stronger dollar. Very back and forth in the Iran war. Some days there's de-escalations. Other days we have further escalations. It's very back and forth. Right now it's really difficult to read that situation and understand what's going on there. Even to the point where the markets are not even focused on that. Right now markets, in my opinion, are more so focused on that monetary policy, than on the interest rates. What are interest rates going to be at by the end of this year? Are we actually going to see a rate hike? Again, that's more so depending on the economic data. So right now, that's what, in my opinion, the markets are mostly focusing on. That economic data in the US, seeing whether or not inflation is continuing to climb. Is that going to start to be a trend? Was that momentarily, right? Because if we start to see that inflation is maybe got hit for 2-3 months with the Middle East tensions, it could possibly start to come down if that conflict gets resolved. Then at that point, we go back to the idea of like, okay, well, if that's getting resolved and inflation is now sort of more in control, at the end of the year, we might not expect a rate hike. We could expect for rates to stay higher for longer. Maybe we won't see a rate cut or a rate hike. We'll just see rates remain the same. They'll remain neutral. The Fed can go with the FOMCs and decide, hey, look, we're not going to do anything. No rate cuts, no rate hikes, right? But more importantly, again, that language. We also got to see how, like, for example, in the next FOMC meeting, very sad to say, we're not going to see Powell anymore. It's going to be Kevin Warsh from now on, right? Now we want to understand what type of tone is this new Fed leader going to bring. Is he going to be more Fed-driven, data-driven, focusing on what the data tells us? Or is he going to be more focused on trying to police Trump as US president, and trying to bring rates down as Trump wants so bad? We have to see that tone and understand how the markets will price that in. So, all right, now as we approach this area, I believe we've done our analysis. If you guys want to quickly look at this on the daily time frame, this can also be good. This is good because you can get that overview. Like I always tell you guys, look at the daily, the 4-hour, understand from a bird's eye perspective what the market is looking like, understand those zones that you're approaching. Right now, or actually yesterday, we talked about the idea that below those 4,500s, it's really, I'm gonna say the 4,500s, but we know obviously that's not the precise price point, right? I'm gonna explain myself why I say that, because the 4,500s is basically where price is at right now. And you can see how around the 4,500s, 4,510s, 4,520s, when you look at that from like an overview on like the daily time frame, it makes more sense, because again, you're looking at basically these lows right here, which I'm pointing out. You're looking at these highs right here. Again, above, it's not 100% precise, the 4,500s, but you guys get the idea of why I'm rounding it up to around that number, because overall, it's around that 4,500s price point that price continues to kind of play around in, right? So the 4,500s is that range where we want to stay below, because looking at this from a daily time frame, we're now back in this range right here. We're not back inside of an area where in the past we have seen strong sellers. we see strong sellers at this zone. Let me know if you guys can see that good. We had, for example, this is the 4500s. Remember, this is the 4500s right here. So we follow that over that line, the overview around that area, and we can see below the 4500s, strong bearish price action. This is a rejection of the 4500s, and we traded below that area. Right here, candle closure below 4500s, a push lower. You have retest of those 4500s pretty much, sometimes a little bit higher, but overall the candle body of where it stayed was below the 4500s. Again, around that price point. Below the 4500s, again, it's a new range where price action at least reaches this zone, which it did so here, it did it here, it did it here, it did it this time. So what we could expect today, excuse me, is rejections off that area, further pushes down, but then we break below the daily wick lows and the daily lows, which is also, it lines up with this area of interest, and we can now look to retest these lows right here. Taking it level by level once we can get below that area right here. And that's us just looking at the daily time frame, of course, just to have that understanding of where those price points are that we need to pay attention to for us to see further continuations, or if we're going to get pushback from buyers. So we have that understanding. Again, you can see how, for example, yesterday's daily candle closed very strong bearish, clearly below our zone of interest, which is what we wanted to clear. And so that price action becomes a lot easier to read. It becomes a lot easier to read just based off of those candle closures. Right now, this current candle just looks like it's corrected maybe about 30% of that candle, not much. Even if it gets above a little bit, those 4510s momentarily, it still wouldn't be like a crazy pullback. You know, for all we know, we can see price correct maybe about 50% of that move, just a little bit above those 4510s, and still continue bearish below that. That's why for me, I'm not going to be too convinced if I just see one simple breakout above for me to try and switch my bias. I need to see candle closures above for me to really switch my bias and then follow through with that. Which again, right now we're not seeing. So let's go ahead and zoom in now. Yeah, you can see on the 4-hour as well. Like again, this just gives you such an easier view, because it's like a lot of times we might look at price action and we might get confused. We might think that, well, oh no, you know what? Price is ripping. It's absolutely flying. Like if we were just looking at that on the 1-hour. And so if you look at that on the 1 only and you think, well, price action is very bullish because look at how many bullish candles there are, right? Like if you see that right here, you might get blinded to the idea that you think, well, if we have so many bullish candles, we have to break above these highs and we have to continue to push higher. That might be the mentality if you look at this. But if you zoom out to the 4-hour and you look at the market right now, what are you really doing? You're really just doing a minor pullback against this very strong bearish price action. You have very strong moves with minor corrections that take place. And then once again, another strong move, another low. So what does that mean that we're doing right now? We're creating a higher low right now, or excuse me, a lower high. We're creating a lower high because price action right now, unless it's trading above this area, we wouldn't be expecting any sort of deeper pullbacks. That's why I keep pointing out that area right there. So that's when you look at the market like that and you understand what we're creating. If you look at just market structure, we have our clear low, a lower high, another low, and we've created right here another lower high point, which is where price is kind of like, it created this low and then it rejected this high right here. If you guys can see that. So that's why I'm thinking, well, okay, as long as we can reject that area, we would be rejecting a previous area of support, which is our new area of resistance. It also lines up with a structure point on the 4-hour. We can see a very clear structure point right there. So we know right there now, by looking at the daily and the 4-hour, and having that overview of the market, we now understand that price action is just doing a minor pullback against the overall trend. That's why we're still on the lookout for further retest and rejections off that area to look for further sells to continue following the overall trend, the overall momentum, the overall structure of the market, all pointing more towards the bearish side. Make sense, guys? Let me know in the chat if that makes sense. If not, I will explain it. I have no issues re-explaining that. Because if it doesn't make sense, then that means I don't make sense. I need to make sure that we do. Good morning, good to see you, my friend. All right, cool. Right, so like I was saying, right now we're really just creating a lower high point at this area here. Let's go ahead and dive onto those lower time frames and see what that's looking like. Because remember, we use those lower time frames to our advantage for us to see when that momentum is starting to shift. Usually you'll see the momentum start to shift first on the lower time frames before you can actually confirm it on like the 1 or the 4 hour and those intraday time frames, right? So for example, what do we need to see if we're looking at price action right now? One thing that I'm also noticing right now, which is, I'm gonna point it out for you guys, which I'm basically just right now kind of coming into that conclusion. As we near this 1 hour, I wanna let that 1 hour candle close, but here's what I'm noticing too. I'm not sure if you guys are looking at the same thing I am. Let me just mark off these lows right here. So we have these lows that got created, which also lines up with this wick rejections around the 4480s. Right here, the 4480s, clear rejections. Here, for example, candle bodies closing above that and rejecting before having a minor push up. And so around the 4480s can be another area of interest that we can be on the lookout for. But what I'm noticing right now is this. I'm noticing that price, it really is struggling to trade higher, because you can see, for example, this high that was created for us, from that high point, price made a new low. That's the low right here. Notice how the candle bodies, or excuse me, let me say this first. Notice how after we had this push off of these new lows that got created for us right here, the wick got to this same area of structure, but look at the candle body in comparison to these. Like when we look at the candle bodies and where price closed, we have this high, this low, this high, which again, the wick did get to the overall resistance right here precisely. It literally tapped it on the dot, like boop, literally. From there, again, the candle body closed below. Notice that? Basically telling you that the buyers that were pushing price into this area were not strong enough to even close near the resistance, meaning that sellers did push a price away from that area. After that, we get a new low that gets created for us, which we can see there, the candle bodies. And now the highs that it looks like we have, are like it looks like we're creating, excuse me, I stuttered a little bit because we haven't closed just yet. With gold, you never want to jinx it. You would never know. It could be we have 1 minute and 44 seconds until this candle closes. You'd be surprised that you'll see gold completely flipped and push 80 pips, 100 pips in 1 minute. And it completely flipped the candle, and all of a sudden we're still closing bullish above here. And then what I'm talking about doesn't make sense. So what I'm trying to explain is that basically, after this strong bullish run, notice how price, once again, from the looks of it, we got 1 more minute until we can confirm that. This candle body is still, it's slightly below this previous one. What that's telling me is that sellers are struggling more and more as we continue to push lower. And I'll point it out again because we have the high here, the low, the high, the low. This is our new high. But notice how each one of these gets lower, including this one. This one is not too good of an example because it's kind of closing. Like if I put the line here, look at where that is. That's just literally just below that area right here. So that becomes an area of interest for us because at that point, that means, in my opinion, that we have less of a chance of us seeing price actually give us a full push into this resistance. It would still be valid in the sense that the overall, like structure wise, because that's where this wick reached, the area of interest still remains the 45.10s. That means that price can still go here and reject and continue bearish, right? But what I'm trying to point out is that we have less of a chance of doing that because each new high that got created after creating lows has basically done this. We have the low, high, a new low, a high that's getting lower, a new low, a high that's getting lower. Again, signaling to me that basically price little by little, at least, even with these pullbacks, is still pushing lower. We would not be having this conversation if we had this candle closure above here. You know, like if we had a candle like that. If we had a candle like that, we'd be breaking basically above that structure point. At that point, I would tell you guys, hey, be on the lookout for deeper pushes into those 45.10s because of the fact that we're trading above previous areas of structure and buyers are still strong. So again, that's kind of what I'm noticing right there, where price is slowly making its way towards the downside, again, minus these pullbacks that we're doing right here, of course. So that leaves us with an area of interest around these zones. Makes it a little bit tricky because it's like the overall zone that we're looking at is still the 45.10s. So from a risk to reward perspective, that would be, in my opinion, like the best. But again, I don't know if price is actually going to reach that area. We can also go and retest around these highs, which is the 45.05s, and reject that zone and continue to push, right? Because again, now we've created an area of resistance right here pretty much. That pretty much lines up with this. During this new 1 hour candle, as we speak, we've basically retested that and we've rejected, and now we're pushing lower. So let's do this. Let's go into the 1 minute and let's look at those structure points and see where we need to start trading below. I'm also seeing this on the 15. On the 15, you can see how, for example, we created this high right here and this new resistance on this 15-minute time frame, and then we have our lows right here. If we look at that on the 5, we see the same thing. Price created these highs around the 45.04s, more or less, and then we have these lows right here. So the structure on those lower time frames is still being respected. It's still being respected because look at that right here. You can see that visual right there in front of you. You have the rejections of the lows, and you will go from more bearish to then flipping against that bias once you start to get above this area, which is this structure point on the lower time frames. This is the lower time frames, guys. So on the lower time frames, you can see how price gets to this structure point. It basically struggles to trade above that. It kind of creates this range for us before continuing to push towards the upside, and you see structure start to shift on the bullish side against this bearish price action, right? So what we need now is we need to do the opposite of that. We need to start shifting out of the structure that's bullish here, which would be, for example, these highs that got created, and these are our lows. This is our area of interest right here. That's where price is right now. That's the current price range that price is in, meaning that, again, for those sells, clear rejections off the highs, we already know that. I've already said that like 10 times. But from a lower time frame point of view, and looking at this structure, we need to get below this area right here, so that way we can start to shift out of this structure and we go back into this overall bearish trend. And again, that's above, or excuse me, that's below these lows right here, which also lines up with the highs right here, basically. Once we start to trade below that, then we know that there is stronger selling pressure coming in. We're at that point more likely to going back to retest those 4480s, which is that new area that we had marked off. And we know that below the 4480s, we've seen reactions off that area. We need to trade below that and really get below those zones of interest, taking it level by level for us to see that momentum. If not, say for example, right now, we continue to trade above this high right here that we have. At that point, this bullish structure is still very much being respected on those lower time frames. At that point, it still becomes tricky to look out for sells because you don't have rejections of highs. So that's what we want to see. We want to see price action rejecting those highs. We want to see strong selling coming in the sense that, for example, here you can see price pushing up. It reaches our area of interest, and look at the wicks. Like if you circle this out and you look at the candles that got formed around this area, you can see the clear exhaustion because price was trying to push higher, and then you kept leaving wicks at that area, meaning that whatever buyers were trying to push price higher were being faced by strong sellers. And then you have, again, these lows, these highs. Let me mark it off. These lows, these highs, which is basically this that I'm pointing out. All right, we have our lows, we have highs, lows, highs, lows. If we're looking at market structure at that point from a bullish perspective, we know we have to trade above here and eventually get above here for us to continue with what we were doing right here, excuse me, with what we were doing right here. If not, we get, wait, let me just point this out so that way you guys can see the live example. If not, you get below the structure point and you start to correct against it. Notice how we broke below that, retested it, and then continued lower. That's what we did. We broke below it, retested it, continued lower. That's what we would want to see, right? We want to see the highs get made, the exhaustion. So at this point, we need to make sure that if this is going to be our high, we can get above that area. That would be the ideal scenario. We don't get above that area, but after we fail to break above that area and we get those rejections, we want to see the follow through below the structure point, how we saw right here. Below the structure point, then at that point, you can be on the lookout for retest of that structure point for further continuations onwards, following like it did right here from that same price point. So that's what we're going to be paying attention to right there. I'm gonna leave that there for now. Or can I look at that better on the one? Let me see. Sorry, I'm just looking back over here. No, that's fine. But all right, same idea on that 1 minute. It's still the same lows, still the same highs. I'm gonna mark off this area just because I'm not gonna completely ignore this zone. I understand that my main zone is above this, into those 4510s. I get that, I truly do. But the current price action is telling me that there is reactions around this zone right here. So I'm gonna mark that off. I wanna see if price can stay below that zone right here, because I believe that anything below that zone just increases our chances of seeing sellers step in from these highs. We have, in terms of like looking at the dollar, strength-wise, it's not very strong. You know, it's not like what we were seeing yesterday that we had very clear bullish price action. It was very clear, right? When we were looking at price, it was climbing. We saw that. At the same time, that gold was also like pushing lower. Today, a little bit different because we do have, for example, a 1 hour candle closing bullish. So basically signaling to us that this 99.3 area right here is still holding as an area of support on the dollar. Still has buyers present. We can see that just from those technicals. So we'll wait. Oh wait, actually I'm gonna redo this here while we wait for price action. But as we wait for price action, guys, let me know if anybody has any questions, if there's any topics that you guys will want me to go over, even if it's things like market structure, support and resistance. We have our ideas listed. We know what we're looking for. We know what price zones we need to break below to have further continuations. We know where we need to reject. At this point, it becomes a waiting game. We have about another 20 minutes until NYSE open, which we know brings more volume. So again, right now we can be patient. You know, we can be patient. We're also just kind of in the middle of the range. You know, at this point, we want to make sure we wait for those high risk to reward setups. We don't want to get stuck trading in the middle of the range, taking buys or sells, and then you're just stuck in an area, hoping and praying that price goes one way or the other. None of that. That's not what we do. No, I do not. I do not use any sort of ICT concepts in my trading. I'm more so looking for the areas of reaction, like the main key zones. And I'm looking for signs of rejections, or even like for me, I'm not really a breakout trader. So like if let's say I'm bullish and we're reaching an area of resistance, personally, I don't look to buy at that area. I still wait for price action to create a high for me. And I really like to get, you know, more price action confirmations. But no, I'm not familiar with FVGs at all, if you want me to be completely honest with you. I used to, honestly, to be completely real with you guys, wasn't a big fan of the whole ICT concepts and all of that stuff. But I actually met a really good trader that dives into like that sort of stuff, the ICT concepts. But he's very technical and very good with like reading price action and understanding candles and how they work, and he's nasty, honestly. So at that point, I can't talk bad about the concepts if there's people that do use it. What I will say from having conversations with this person and honestly having my opinion change on ICT, it really falls down to each individual's plan, you know, because I can teach you great concepts, but if your psychology is off and it's bad, you're not going to be a good trader. Someone can sit down with you and give you the best ICT concepts, the best ICT signals, the best, all of that, the magical strategy. And yeah, if your mind is messed up, you're still going to fail in trading. So trading is really an individual game. You know, I know we sit here and we do analysis and we work together as a community, but in reality, that's why you don't see me here telling you, hey, let's buy or let's sell. I don't look to do that. I'm trying to make sure that everybody can make their own decisions, including myself. I'm not trying to convince myself to take a position. Neither am I trying to convince you to take a trade. I'm simply pointing out the facts of what we see. Everything that you see me talk about is straight facts in front of us. It's facts in the sense that it's technical concepts, right? We know that the markets are very complex. I'm sure that if a high-level macro analyst saw what I do, he'd probably think I'm silly, because we're here diving into the lower time frames, trying to map out key areas and key zones. For someone like that, that could look silly. But from a day trader's perspective, and having an understanding of how these markets flow and how candles work and how these key levels function, for the most part, you guys have seen we do really good analysis. But again, it's all facts. It's all right here in front of you. It's very simple technical concepts. And when we talk about those macros, we talk about things that the high-level economists talk about. Everything that you guys see me here talk about, higher inflation, higher bond yields, all of these things, if you go on to, let's just talk about whatever, you know, you can go on to, even Trading Central has like their own articles on GatesFX, right? Like you can go on to Trading Central and you'll have articles to look into. You have plenty of resources online as well. You know, as far as Reuters is very good. You have Investopedia. Who else? Trading Economics. I'm not the biggest fan of Forex Factory. I prefer maybe like Trading Economics. But for the most part, me personally, I've honestly just been using the GatesFX dashboard. And I just, you know, keep it simple. There's obviously, again, there's other tools that you can find, that you can see to help you understand the markets and like the fundamentals. But again, it's all facts. It's all just what we see very objectively. You know, we're not making things up or anything like that. But all right, so we're reaching our high point right here and we're breaking above that area of interest. So right now, as we speak, the overall structure on those lower time frames has not shifted, right? We're getting, let's see if we can get rejections off these highs. It looks like price action is trying to push. But what I want to see is price reject these areas right here. Remember, it could even get a little bit higher and still overall reject and continue bearish. But if we get above these highs, I would say be more patient for a higher price point to reach before looking to take advantage of sells. Just because of the risk to reward. Because right now, again, we're still seeing that overall continuation towards the upside. Like again, looking at this on the lower time frames objectively, it's still, if you just look at the market right here, you can clearly tell it's still more on the bullish side, right? That's what we want to break out of. We want to start eliminating that, which again, we need rejections and then we need breaks below structure points. Right now, we're getting only pushes above our key area of interest right now as we speak. Let's see, we have another 15 minutes until the 30-minute candle closes. Look at that engulfing candle. Faking out buyers right there. But that's what we want to see. We need to get the rejections off these highs. And then again, if we can get that and we get strong volume, we need to break these lows. If we only reject this area, but we fail to break these lows, then at that point, we're still on this bullish lower time frame trend. We can still continue to push higher. So that's why I want to say, like, okay, reject of the highs and then break of the lows to really have that confirmation to hold on to a trade, for example. But yeah, to further answer your question, it was more so like when it came, I'm very much for knowledge when it comes to the markets. You know, I want to analyze the markets as objective as possible. So when it comes to me taking a position, I have real meaning behind what I'm doing. You know, it can't just be as simple as a break of low or a break of high and then I press buy or sell. You know, if it was that easy, that's just what I would do. But I've tried that. You know, I've tried that. I've tested strategies that are very simple like that. It does not work. When I first really got into, let's say, learning a little bit about ICT, for the most part, it really just lined up with technical concepts. You know, you were just putting like crazy names on top of it. So it just kind of made no sense because it's like you're still looking at the same exact chart, same zones, same market structure, same ideas really, but you're creating these names, turtle soup, IFVG, what? It was too much. Manipulation of the markets, and the markets are this and that. And what's this guy's name? He invented the algo. What? I was like bamboozled. I was just baffled, confused. So at that point, it was too much. It was just like, no. Let's go back to the basics. Let's stick to this, and we'll follow through on that. And that's what's worked for me. So that's what I'm gonna stick with. If turtle soup IFVGs is your thing, and if you make money, hey, who am I to judge? You know, what really turned me off, like, it was the fact that people would genuinely fight me and argue with me online. People I don't even know, telling me, you're silly, you're stupid. He invented the algo. He's just telling us for free how to take advantage of it. Let me calm down. Let me not get controversial here. But you know, it was honestly a conversation like that I was just like, you know what? No. This is por aquí no fue. It's just, it was too much. When I talk about my friend, my trader friend that does the ICT things, he doesn't talk about that. He's focused on the charts. He's focused on the technicals and what those concepts, you know, mean. And he keeps it very technical just off that. He's not here, you know, just rambling about this guy creating this algo and he's doing it for free. He's for the people and everybody hates him for it. I'm not even gonna get into it. Coach, I know you know what I'm talking about. But all right, so paying attention to price action here, we got a minor push above. Looks like price action really just faked out buyers at this area here. Overall, still rejecting those 45.05s. We have a push of about 50 pips right here into this low point. The overall low point that we're looking at as like maybe our first targets would be like 100 pips in my opinion, like those 44.94s, right around this area. This would be that area where it's like, well, you need to trade below that for you to continue to push further and really go against this structure that we're on right now. But man, look at those reactions right there. Talk about clean reactions. But yeah, what's also interesting, again, about like what we were just talking about with FVGs and technicals and fundamentals, at the end of the day, for the most part, it does not matter. What matters is yourself, your own, how you can put this down in writing and follow through with that. That's what matters. You know, and trading in the zone is what really taught me that. And market wizards, market wizards too. Market wizards, there's some traders in there that are like doing crazy strategies, or they're doing really simple ones. And it just so happened that this person made this much money during this time because conditions were in his favor versus the other person didn't. Like I've seen traders, for example, that will make 20, 30, 50,000 in 2 months because they've been following a strategy just over and over and over again, only doing that, trying to perfect that until the moment that finally the market aligns with their strategy. It aligns with perfect conditions. And because they're so disciplined and they're only doing that, then for 2 months straight, they basically milked the market, right? But because they were disciplined enough to follow with just that, whether it's very technical, very complex, it doesn't matter. What matters is, can you actually follow through on this, right? But then the problem with only following through on one strategy and sticking to that and being blinded to that is that the day the conditions change and you're still just following that same strategy, your strategy is outdated, you know? And now conditions are different, macros have changed, volatility has increased, volume is higher, and you're here taking trades as if not. You're trying to completely be ignorant of that fact, that the market conditions have changed, right? I saw multiple people go through that when Trump came around. People that I had conversations with in the sense that, hey, look, your technicals and your fundamentals have been working for this time, but pay attention to the conditions that you have been trading in. We're about to enter a new phase in the markets. Trump is about to step into office. I would tell them, hey, look at how the markets are reacting by just the idea that Trump could be president. Not even that he was president, but he could be president, right? A ton of volatility. Once he came into the markets, Mr. Trump became the tariff man. The principle of tariffs. It was tariff after tariff after tariff. Tariff one day, tariff off the next day. And so I'm looking at my trader buddies that were just making money with their basic concepts. Now they're getting wiped out because it's tariffs every other day and Trump saying this, Trump saying that. Instead of you going on defense mode and understanding, wait, you know what? Macros are changing. The volatility is way too high right now. Mr. Trump is talking about tariffs every other day. I need to maybe not change your strategy, but you definitely need to look to find ways to defend your capital, protect that capital. How do I manage my risk now that the conditions are different? You can't just always look at the market and you're here trying to go through this with knowledge from 2018 because you saw an old course and you're thinking, why is the market doing this to me? Why don't I understand what's going on? Well, you're learning from someone that taught you in 2018 or someone that's teaching concepts from 2016, you know? So the market is forever evolving. We're in 2026 at the height of macro awareness when it comes to markets. In my opinion, macros have obviously always existed. You think back to the 70s, 80s, you know, back in the days when they didn't even have computers to trade on, they were trading, you know, macro analysis, and technical analysis came into play, right? Like all of these things have existed for a long time. But now more than ever, like think about 2020. Think about the trading industry in 2020. Everyone was doing Fibonacci's and technicals only. That's everything everyone did. Fibs, technicals, support and resistance, get over it. You know, nobody was talking about macros, not that I knew of. Very few people were talking macros. Now 2026, you're genuinely cooked if you don't have at least a bit of understanding and macro awareness. Everything is way too connected to these data events and these news events, and so much going on with wars and Trump being in office. The liquidity with the markets has changed in themselves. More money within the markets, you know. The crashes are a lot faster, just as the recoveries are a lot faster. You know, it's no longer taking weeks for something to recover, for an asset to recover, excuse me. All right. So again, I say these things so that way you have that understanding that, again, the markets are forever evolving. That means that you as a trader need to do the exact same thing. You need to be forever evolving. You need to be doing whatever is necessary for you to be able to trade with more clarity, more awareness, more knowledge, right? You have to be an expert at what you do. You're talking about the financial markets. This has to be one of the trickiest, one of the toughest industries to be involved. Why are you going to cut yourself short trying to simplify this to the max? I've had this conversation with people, and I've always told people, look, there's nothing wrong with keeping the market simple and keeping your strategy simple, but you need to earn your simple. You need to go through the markets. You need to have notes. You need to have things that you've studied. Once you've gone through that data and you have data points in your head, at that point, you can then decide, you know what, this works, this doesn't. That means remove this, keep that. And if you can find simplicity by doing that, by removing noise, keep what works, stick to that, journal, repeat the process, go through that, do it again tomorrow, journal, repeat the process, you get me? At that point, it's gonna get to a point where you do earn your simple. It gets to a point when it comes to acting in the markets, you don't have to think too much. You simply do your analysis, you wait, and you react when it's necessary. You're not here giddy and like, oh my God, this price is gonna break the lows, is it gonna break the highs? And you see price breaking highs and you're like, fuck it, I'm gonna just enter a buy. I know someone in the chat has to understand that feeling. I know that because that's exactly what I went through. Going back and forth between biases, needing for my bias to be perfect and not giving price a chance to really sit there. Like for example, look at what we're looking at right here. As price was approaching these highs, I told you, be careful because we're breaking above the highs, right? Let me go back to professor mode. As price was approaching the highs, what did I tell you guys? Be careful because we're seeing still overall structure pushing towards the upside. If we start to see candles closing above that area, be careful for deeper pullbacks. We understood that. But what did I also say earlier? Just because price is breaking above a high does not mean that you need to switch out of your bias. I even went as far as to tell you from my personal experience, what I would do is I would wait for a high to be made and then look for a retest to then look out for buys so I don't get faked out trying to just buy the breakout. If you got, let's say, too excited as price approached that area of interest and you saw this break above, you completely got faked out. You completely got faked out because you did not trust your analysis, you did not trust your bias enough for you to sit and say, you know what, I'd rather wait and see if price is maybe gonna do a little bit of a deeper pullback and then push back below the zone where I can then at that point look to sell. Look at what happened. Price got above, followed by an engulfing candle right below. So you're back below the area of interest. That means that you're still seeing price struggling to trade above that area. At that point, what do you need to see? You need to make sure again that price doesn't get back above that zone and you get pushes now below these lows right here, which is this like structure point, these lows that price created for us. We're trying to break below that area, which is what's happening right now. So you see again here, overall, this is like what, 100 pips, more than 100 pips worth of movement overall now from the highs. 150 pips from those highs. Now as we reach an area of reaction. Now is where that zone becomes important, in the sense that, well, we need to make sure we can trade below those zones and slowly at that point look to correct this move that we have here into this area of interest, right? But we got so far our first point of our analysis, the sells off of these highs, which we understood could have been the 4505s or even as high as the 4510s. We pointed out both based off the price action. Again, the price action right now is doing the speaking for me. I don't think I need to talk and explain that to you guys. You guys see it right there. But again, is this something that we made up? No. We were following technicals. We were following the overall fundamental narrative. We saw the dollar strength still holding. It wasn't really strong like yesterday. Like price was pushing really strong yesterday above an area of interest. Today it was more so reacting at these lows. And then we got reactions off here. Now we're seeing a little bit more strength. Now pushing above back into these highs right here, right? That's what we're seeing right now. So again, we still have that correlation pretty good for us. And then it makes sense why right now we're also seeing some weakness on gold, right? But as we approach these areas, look at how dollar is approaching an area of interest. Same time that gold is also approaching an area of interest, right? We want to see if we can get a good correlation, in the sense that, well, if dollar continues to climb as gold is at these lows, then it is probable that gold will likely to continue pushing lower, at least into those 4480s, which were like 100 pips away from that. Seems like a lot, but we just saw 150 pips in what? This has to be 15 minutes. 30-minute candle just closed. That's NYC coming in, or excuse me, NYC open. Let's be on the lookout for any sort of volatility coming in. We got the break below these lows right here, which is really that structure point right here. We're getting the break. Let's see if we can hold below that. But so far so good. We are now starting to show a lot stronger signs of a shift in this lower time frame structure, based off of these rejections and based off the break of like these lows that we had around this area here, those 4492s. Let's see if price action is going to flow in our favor and be good to us here, and we can stay below those 44, let's call it the 4495s, so we can stay below that and start to trend and push towards the downside into those 4480s there. Again, that volume from US 30. Our analysis from a few days ago on US 30 is still pretty valid. I wish that the guy that was here that made that analysis with me was here, but I don't think he is. But basically what we were talking about is that 44,600s area being our key area of interest, where in the past we've seen sales take place below those 44,600s, below 44,650s really. It's this area right here that I'm looking at. And you can see price action, even though it momentarily breaks above that, it doesn't really hold above those 44, 49, 60, 650s. It goes above and then it like breaks back below it. It got really messy above that area, but overall those 49, 650s really is that key area that held. And then the continuations came below this area right here, which is this zone of interest, the 49,500s. But let me see. Yeah, I would say just right here, 49,500s. So that analysis is still holding through on us being more bearish below those key areas, 49,600s, 49,500s. At this point, just be on the lookout for any pullbacks into this for further pushes lower, or continuations below these 49,260s here. But yeah, obviously easy to say in hindsight that Those sellers are strong there. I apologize. I'm not gonna lie. I need to get used to doing multiple analysis. I usually do analysis on gold and I get lost in gold. I'm not gonna lie. I'm an expert when it comes to looking at these technical zones on gold. Yeah, look at this on the 30-minute as well. Remember what I was explaining earlier, how those highs kept getting lower? Look at this high point, the low, the high, not as high as this one. Then another low, then another high. Again, not as high as this one, almost close, basically around the same. But the candle bodies are still slightly below. They're like precisely at the 4500s. You see that? Look right here. Precisely 4500s. Someone's whipping their Ferrari outside this place right now. Flexing. That guy took profits already. 4500s. But yeah, you can see that a lot more clear also on that 30, how that resistance got created for us there before. We saw that even on the 1. It's still pushing. So yeah, at this point with that 30-minute candle closing that strong, I'm thinking we can still make our way down until those 4480s. Just hopefully we don't get any strong pushback. Even the 15 also starting to fade out these buyers right here, which were pushing. And then you have these lows that got created, which sellers right here basically just ate up that price action right there. They basically eliminated that and say, nope, you're not here. You don't exist no more. Let's now see if they can hold, if those sellers can hold below that area and push price lower into those 80s right here. The 5 also, you can see that shift starting to take place, where it's like you get the rejections and the breaks below the zone of interest is being this one. Again, we don't really want to see price climbing back above into that. Let's see if with this new candle we can get some volume. Did anybody take any trades today on any pairs? Is there any pairs that you guys would like me to start going over? Tomorrow what I'm going to do is I'm going to have a little checklist here in front of me. And I'm going to go over at least US 30. We'll also take a look at UJ. We'll take a look at USD JPY. So we'll look at gold, obviously the dollar. We'll look at US 30. We'll look at USD JPY. And then we'll analyze that and then see what type of opportunities come from that. Unless you guys have like any other suggestions. If you're going to give suggestions, keep it on the USD side. So that way we know we're fundamentally aware of what's going on with the USD. We know for the most part, whatever happens with the dollar, other pairs will just follow. Whenever you see those strong shifts in market sentiment, you're going to be able to see how dollar reacts and everything else follows. Dollar is number one. That dollar is daddy of currencies. Dollar is global reserve currency, you know, that's the main dog. So that's why for the most part, if you understand the dollar, you can almost close your eyes and you tell me a pair and I'll tell you how it's doing just because I understand what the dollar is doing. For the most part. One that might be a little bit different, for example, is like USD CAD. USD CAD is a little bit different because USD CAD highly depends on oil, excuse me, on oil exports and stuff. So it's a lot to do with more like, okay, what's going on with oil? A lot of times you look at oil and USD CAD, they're kind of very correlated as well. That's one that I've seen be a little bit out of touch with like the overall USD movement. It's more so following oil. So, but again, as long as we're aware of those things, then we're not lost. We understand. But all right, following price action here, we have a clean little push through right here. Again, let's see if that volume can hold up. We have clean market structure being created for us right now. That volume is picking up. This is good. We'll just go into the 80s. I got you. That's my Instagram, brother. And not just for you, but for everybody. If you guys have any questions, I'll be happy to answer you guys. And oh, let me give you guys, give me one sec. That's my Instagram. I'm gonna give you guys the GatesFX Instagram as well, because we had created a new page. So This is the new page right here. So follow both those pages. We'll be happy to answer more questions about that. But I will say this, Mr. Corporate or Miss Corporate, not sure. We're here every day live around 8:15, just before 8:30. Today we started at what, 8:20, I think it was. So around 8:15, 8:20, like again, anything just before 8:30 is usually when we start our live sessions. We're gonna be here every single day, Monday through Friday, unless there's like holidays or if I run into maybe any sort of emergency, which for the most part, thankfully, blessed life, and I'm here, I'm happy, I'm alive, I'm well, healthy. So we'll be here, we'll be doing good work. We'll make sure to break down. Last week was very interesting because last week was our first week trading, and we also had a economic data packed week. It was CPI, PPI, retail sales, jobless claims. We had multiple things to go over, so I was a little bit like, sheesh, I don't want to overwhelm everybody with fundamental knowledge, but in reality, we went pretty deep into the topics. Not too crazy, like I tried to avoid very advanced, how do you say it? I'm having trouble, what is that word I'm looking for? Like I'm not trying to overwhelm you guys with the lingo, with the language that comes sometimes from talking macros. What I'm trying to do more so is make you guys be aware of how macros impact the markets. In reality, what I really want you guys to do is to go and do your own research, because no matter how much you listen to me talk and talk and talk and break it down on the charts and all of that, you will not get a true understanding until you yourself read it, connect it to the charts, and then see it for yourself. But again, we're here and you can always study the previous sessions. You'll see how we analyze every CPI. The next NFP will analyze that. The next FOMC will analyze that, But again, until you yourself go online and look up what is FOMC, you're not going to understand what it is, And again, I'm not trying to push you guys to do one thing or the other, but I will say market awareness and market knowledge is key when it comes to understanding these markets, especially for beginner traders. I'm not one of those guys that's going to sit here and tell you just pay attention to technicals because that's all you need. That's just not true. It's not true in my opinion, so I'm not going to tell you to do that. I will tell you to look to line up technicals with fundamentals though, because I know the macro impact that the markets have. And I mean, you guys have seen it. We've been pretty much bearish since, let's say, just from when we got started, right? When we got started, say when we just met each other. Oh, by the way, you guys got the Instagram? Yeah, do me a favor. Again, follow those Instagrams. Go to GatesFX. Tell them Tarzan sent you from the live streams, so they know. But again, what I really wanted to point out, let's get serious here, back on topic. Were we or were we not bearish since last week from a fundamental perspective? I want to know, to those that have been joining the lives, I want to see if you guys can say it. Excuse me. Were we or were we not bearish from last week fundamentally? And were we or were we not following it level by level? We weren't just sitting here telling you we're bearish, sell and hold gold. No, we're bearish, but look at these key levels. We need for this and this to happen, right? Like a break below, candle closures broke below, blah, 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 blah. We marked it all down. We've been bearish since last week. Look at the moves that have taken place. We were bearish this morning. Look at the moves that took place. We were bearish yesterday. Look at the moves that took place. From understanding fundamentals and letting key levels and price action give us those confirmations, right? To the best of our ability, to the best of our knowledge, that's what we do. And from what I've seen, we've been on point. Never lost. Never here completely lost and thinking what is going on, why the price did this, are you surprised that price broke the lows? No, we're just following the flow right now, following the market structure, the trend, looking at candles, understanding where price is at. And just being objective, really. And again, that's what we do. I'm not saying that to boast. I'm saying that to let you know that what we do here is repeatable. But all right, we've pretty much reached the lows, guys. We're a few pips away. Come on. It doesn't have to be perfect always. We're like less than 20. We're like 20 pips away from reaching the 80s. At that point, if you're looking at price from the 4500s, from those 4505s, that's a 200 pip push on gold today. Now, the question of the day, as always, did you guys take any trades? If so, from where? How did you manage your risk? What did those positions look like? Let's talk a little bit about that right there. Well, because I know some of you are curious about my trades, I want to talk to the team and see, if possible, to do more trade breakdowns. For the most part, I'm really just here to spew knowledge, awareness, insights. That's what we're here for, and to make sure that I answer all you guys' questions, anything that you guys have to, any sort of doubts, and again, just questions. Your name was Yashua. When analyzing dollar on your personal time, do you ever look at the weekly or monthly time frame? Sure, you can. For the most part, I don't look at it too much, but yeah, like I'll do that maybe at the beginning of the week only, to be honest. Like if I'm doing analysis on Sundays and say we're reaching the end of the month, okay, I'm gonna look at the monthly just quickly. Like I'm not really over-analyzing the monthly or the weekly time frame. I do over-analyze more the daily time frame. The daily time frame, you'll see me go into that a lot more. Because I feel like the daily time frames, that's very important for day traders, following that on a day-to-day basis. Weekly and monthly, not that it's not important, it's just I think maybe that could be more important for someone that's swinging and you're looking at weekly levels to target and you're holding your trades for 5 days. At that point, we're having a different conversation. Me, more so on the day trading side, I'm holding trades for 30 minutes, an hour, sometimes maybe 2. But with gold, the moves happen so fast majority of the times that I'm really in these trades for 30 minutes and 1 hour. At that point, I'm almost a scalper, But yeah, you won't catch me over analyzing those other higher time frames. Again, still good to look at, just so you have an overview and a picture of where price is at. But you'll see me way more like on these lower time frames. Like you guys, I'm sure you've noticed by now just how much I use the 1. And I'm not using it to get the key confirmations, right? I use it more so for the entry confirmations because of the precision that you can see. Like for example, look at how this candle, we went from closing above to closing below. That's still showing rejections. You see that on the 1 minute. That's a clean entry right there, Little things like that where I'll use it. But overall, still kind of just looking at the 1 hour zones and things like that. But yeah, if you guys are like interested in doing more like market reviews, I would love to review my trades with you guys, review some of your trades. I believe, if anything, it'll be better once we create a community. That would be pretty cool as well. Like if we can have our own private community, at that point we have less limitations on what we can do. But in terms of like YouTube, these live streams, we're trying to keep it as much, just more knowledgeable. Because once you start showing results and once you start showing profit and loss, that's when unnecessary judgment comes into play, Like I'm more interested in knowing whether or not you followed your trade and your trading plan and your system versus if you made 1,000, 500, 100, 10,000. Because people can come and make money in the markets just by gambling and getting lucky. They just so happened to come in today, they wanted to buy and they bought at just the right enough time that price went, but can they come and do that again tomorrow? Definitely not. So it's like you can come here and boast. You also, it just becomes an ego trap. Then instead of us focusing on the markets and the moves and the knowledge that we should be focusing on and studying this, it becomes an ego trap. And it's like, oh, I made this and you made that. And it's like, you think I'm better or you're better just because of money. When in reality, even if you're making 100,000, let's talk real about what the markets are. If you're making 100,000 on the markets, these markets are so large that you are a little boy, a little fish, a little krill in the ocean. It is nothing. 10,000, 20,000, 50,000, all of that is so minuscule when you talk about the markets as a whole that it's like, why are you going to sit here and talk about that? Again, does not matter. And this is not to knock off anybody in their profits or their losses, because again, someone can be losing money, but they're following a system that eventually that system can turn into a profitable system. Again, what's important is that they're following that system. Not that they were losing money, not that they were making, they were following a system. Once you're following a system, you then focus on, okay, how much am I making? Because, okay, now I have the capacity to actually follow through on what I say, on my plan, on my system. At that point, you then focus more on, okay, now if I'm making $100, $200 per trade with a system in place now, how can I look to scale that? That's when you can get into the money talk. But I feel like everybody skips over everything and goes straight into the money talk to just try and boast and try and be Mr. Cool Guy. Mr. I'm better than you. That's what you see on the whole internet and the entire industry, basically. Nobody really talks about knowledge and awareness and trying to really understand and dissect these markets. It's more so, I made this, I made that, look at me. Oh God. But all right, back to the markets here. We are at these lows. We created new lows and we're at an area of interest, which is just a little bit above our main zone. We know that price action a lot of times is not going to precisely go to the exact zones, even though we are very good with our overall zones. Like say these were our overall zones. We've basically tapped both. We understood this was our overall zone, kind of like around here, where I can't sit here and tell you price today is going to precisely reject this area. I can't tell you that because it's, first of all, it's just not true. And price, again, as it did today, look at how you broke slightly above that. Still within that range, still rejected, still pushed lower. Overall, we were looking at these areas right here. The highest point was the 45.10s. Yes or no? You guys get me? So overall, we know we were on point with that. At this point, we've once now, again, look at how those concepts that we talk about, they continue to repeat themselves. Look at how once we got below that structure point on the lower time frame, we haven't gotten back above that, and we're still trading lower. Meaning that probabilities, meaning that probabilities are still on our side. We just need to see the further breaks to retest those lows. How do you eliminate that? How does this become invalid? Well, you don't break the lows and you break back above this area of here. At that point, you're invalidating and going against this overall momentum, and it becomes tricky at that point if you're trading above here. Makes sense? Please let me know in the chat if that makes sense, because we're about to end our stream in the next couple of minutes. So I need to know if you guys have any more questions, anything that we need to go over, any sort of review. Right now, it looks like dollar is pausing at the 99.4s. Let's see if that reaction will follow through on gold as well, by maybe price reaching a little bit lower and pausing here as well. But we know below those 44.80s is where we can see further continuations down into the 70s. And we'll take it level by level with patience. Cool. Thank you. Thank you for the feedback. But again, so far today, good analysis. Over 200 pips off of these highs right here. Say you took the continuation below the lows once you saw the momentum was picking up, because you're more of a breakout trader. Momentum still picked up and pushed. It first pushed an initial 50 pips below the lows, like these lows that I'm pointing out right here. Overall, maybe you waited for the retest of that area. Overall, it's still pushed over 100 pips. So there was opportunity from the middle of that range, which for me, I'm not the biggest fan of because it kills risk to reward. But from those highs, the cleanest risk to reward, over 200 pips right there worth of price movement. We'll see if we get any further continuations. Obviously, tomorrow we'll do our review, our breakdown, understand what price did, and then we'll see just how good that was. Ouch. If you guys need me to put the Instagrams back up, let me know and I'll do that. Also, make sure you guys subscribe so that way you can get the live notifications every single time that we go live. And so that way you're not just refreshing your page waiting for me to do that. On the Instagram as well, if you follow the Instagram, it's likely that we'll go live on the Instagram as well. The only thing I'll warn you guys of is that on the Instagram page, if you join the Instagram, say for some reason YouTube isn't loading for you, it's just going to be like half of this. So like you won't really see too much of me over here. So I'll basically be more on this side talking. So that's why I'll tell you guys, like, you know, the YouTube streams will be better because you have the entire view and you get to see me over here. Instagram, again, it becomes limited because it's, what is it, vertical? But yeah, you guys will get the idea once that goes live. Let's see, overall momentum still looking clean. We need to break these lows. We'll give it another 5 minutes. We'll basically go until 10 a.m. and then we'll call it a day there, guys, all right? Oh yeah, and if you follow me, just send me a DM so I know who's who. Tell me that you were on the live stream. All right, we're at those lows there on gold. See if we're gonna get any sort of clean momentum and push through that. If not, it looks like we're pausing. But right now, the momentum looks clean in terms of price action. The fact that we couldn't get back above those 92s, the strong bearish candles leading down into the lows, really just need volume in our favor at this point to push those final 10 pips to reach the overall zone that we're targeting. By the way, standing and trading, not so bad. I used to, honestly, for the most part, I've only traded on a seated desk, you know, sitting down, doing analysis with mouse. Whiteboard and standing up, trading, keeps you alert, keeps you on your feet. Well, quite literally. Quite literally keeps you on your feet. So if you're someone that maybe has some trouble focusing, try standing up. I wouldn't say I had trouble focusing on the markets, but I definitely caught myself doing a lot more, especially when I would trade by myself, because for the most part, I've always traded with the community. I think I've traded with people for, what is it, like 3 years now, almost. Yeah, 3 years. Since 2023, I've basically been trading live with, whether it's students, other members, things like that. You know, I've had my own communities in the past as well. So I've always been trading with people. I very much understand what it is to sit down and have to explain this to people. But when I would have my 1 days where I wouldn't trade with people, it was honestly just me reading for the most part. I put price alerts, which is something that I could recommend for you guys as well. If you're someone that maybe looks at the market, and the more you look at the market, the more you convince yourself to take a trade. This happened to me, and this is how I combated that. I started putting alerts. For example, if I'm waiting for price to reach these highs, and I used to be a very impatient trader. I used to be very impatient. I used to rush my entries. Like once I had an idea set up, I wouldn't wait for that idea to play out. I would force my idea into the market. Like once price reached my zone and I wanted to sell, I would just sell. I wouldn't wait for technical confirmations. I wouldn't wait for maybe price to do a potential fake out or nothing like that. I would just be like, no, it's here, I'm selling. You know, that became a problem, obviously, because I would analyze my journal and it would be like, no, you're rushing trades, constantly rushing trades. How I combated that urge to take a trade in the market, genuinely could not sit in front of a market and just sit there and let it be. I was just a tweaker when it came to when I was first learning the markets. How I learned to combat that, put an alert close to those highs, say around here, and say you were looking for either a pullback to look for price to sell off from a high, or you're looking for a continuation below a certain low point. I'm gonna mark off those highs, I'm gonna mark off those lows. At that point, I'm gonna go to a different tab and I'm just gonna read. I would watch YouTube, you know, like documentaries. I'm a big documentary guy. Used to be, haven't watched too many documentaries. But like when I was first learning about the markets, I was obsessed. I am that person that quit their job. Not suggesting for anyone to do that because I definitely went through it because of that decision. Quit my job and decided to dedicate my life to the markets. So that was waking up every single day around the same exact times, analyzing the markets. I would put my alerts, start to read and just do market research. That's honestly how I got so knowledgeable with the markets. Because during my trading sessions, a lot of times I would just not look at price action too much. Unless it was like, let's say for example, right now, okay, we got a 1 hour candle close. I'm gonna go look at that. I look at that, I understand it, I see it. Okay, very well. We have the resistance that was created. Price went into that area, rejected. We've closed bearish. At this point, if I'm waiting for a trade, it's gonna be a breakout below the lows. Okay, I understand that. I'll go back to those lower time frames, back to reading, back to doing research. You know, staying busy, keeping the brain active. So when it comes time to actually taking a trade, say price action is now reaching my zone, I'm not too attached to the market or like too eager to get into the market. I'm more so calm, more composed, and then I get to engage with the market if I need to. Now, obviously, as you can see, with time, after doing that for so long, it got to the point where finally, yes, I can look at the market and I have no urge or no need to take a trade. I could do the most perfect analysis. It can be reacting perfectly, but if I had made the decision beforehand that I'm not going to take a trade, I'm not going to take a trade. You eventually get to a point in your trading career where you say something and you do just that. But trust me, I know what it is to say something and not follow through on that because of lack of discipline or lack of patience with the market. And no need to feel bad about it. That's honestly something that you train for. You don't just, I don't know, I've never met the person that is just like, oh, I'm going to be patient, and they're just magically patient with the market. Our human minds, we're especially if we're young, you know, speaking to my boys here still in their 20s, that grind culture, the hustle culture, you want to do things, you want to be active, and you go into the markets and you bring that activity, you're going to get slapped up. The market is going to eat you up, man. You know, now again, with time and experience and genuinely looking at these markets for hours, as I trade, it's 2 hours, 3 hours maybe, I'm good to go. If I don't get my opportunities, I'm out. It's not like, oh, I'm gonna go and look at it later and hopefully there's a trade. None of that. You have to remove that and stay disciplined to the trading times that you put for yourself. Trust me, guys, you're gonna see how I make sure to hold you guys accountable, you know, keep you guys good in the sense of like, you know, knowledgeable, aware of the technicals, aware of those fundamentals, taking it step by step, right? Without doing too much. We're not over analyzing, right? We don't over analyze. We explain topics in depth, right? There's a difference between over analyzing something in terms of like, in comparison to doing a breakdown that's in depth, you know, which is what we do. We go in depth on the markets. We don't over analyze. Don't think that we overcomplicate or anything like that. All right, guys. But with that being said, appreciate you guys for coming. We've basically made our entire move now. We can end the stream on that note. We went from high to low, following our overall analysis. We now just need to take it level by level. You guys have my Instagram. Just DM me if you have any further questions. Other than that, I will see you guys tomorrow around the same time. All right, take care.